Hello, good morning everyone. On today's video we are going to review the contract rollover on the futures contract. As we know, on futures the contracts change mostly each 3 months, but on some cases like crude oil it changes all the months. So we need to know which is the current contract before we start trading. Usually we must always trade the contract with more volume, and usually rollover days we have volume peaks to change from one contract to the other. Those days it is better to stay away or not trading. To detect which are those days we have several tools. First of all, on Ninjatrader, when we look at a historical chart, we see a continuous data, but it is created by an automatic rollover done by Ninjatrader. We must check on this parameter on options, data tab, and the merge policy. The default option is merge back adjusted. If we have that option selected, then Ninjatrader places the corresponding instrument on each date. This is the option used for creating this chart. If we use do not merge, then we only get the data for the instrument that we select on the chart. Let's say that we reload the historical data now with the do not merge option, and now we add the volume. As we see, the volume is present from the rollover week. On the week where we have the day 17 or 18, usually this is the week of the rollover on crude oil. I will add more days. With a bigger time frame, so we can see which is the time range where the current contract has volume. As we can see, on the week with between 18 and 19 is when the contract rolls from one contract to another. If we use the merge back adjusted and we refresh the historical data, then what we get on the chart is the volume of the contract corresponding to the displayed data. So it is doing an automatic rollover. When has decided to do the rollover, this can be seen on Tools, Instrument Manager. We select the instrument, search, and edit the instrument. We go to the miscellaneous tab. At the bottom we can see that we have definitions for 112 contracts, and here we can see for each contract which is the rollover date and also an offset. This offset is used to calculate the difference between current and next contract. So to be able to put all the contracts together, we need to add an offset. This offset is the difference between the May contract on 15 March and the April contract on March 14. And as we can see, for the platform, March 15 is the rollover date for crude oil to the May contract. So if we set crude oil for May contract, from March 15 we are watching the volume and price for May contract. On the past we are watching the volume of April and also the price of April plus the offset that we saw on the previous page. This offset is the difference between the close of the April contract and May contract. So now we have May contract, April contract, and it looks like a continuous data stream. Now if we want to know the real volume for each contract, we need to disable the merge and adjust option. So we can set this to do not merge. We should always have the merge and adjust. Only use this option to compare two contracts. We refresh the data, and now what we have on the chart is the volume for the selected contract. It is not doing automatic rollover. If we want to compare this with more contracts, let's say that we add the April contract, I will select an OHLC format, so with red color, the volume also in red. And now I will add another data series, the April contract on the same time frame, same number of days, and also the same session. In green color. And we can also add the March contract, also with the same time frame, same number of days, in gold color, with the same session. So at the bottom we have the March, April and May contracts. The March contract no longer exists from rollover 2 days after rollover. The rollover was on February 17. Between these 2 days, 16 and 17, the volume changes from one contract to the other. Then at the following week, we may have 1 or 2 more days, but with very low volume. Today we are on the 17th day. Tomorrow, Friday, is Friday 17, so we may have all the volume on the new contract. If we want to see the volume for all these contracts, we can add the volume on the input series. We select the correct instrument, April, in green color. And we also add the volume for March in gold color. Now, to compare, we can place all the volumes together. And we can also do the same with the price. We can put all the prices together. And now we can see which is the dominant volume for each date. As we can see, on this week, on February 17, the yellow is March, green is April. So on 16, Thursday 16, most of the volume is on the new contract on April. I will use lines instead of bars for March and May, so we can see easier which is the difference in volume. The red is May, volume in May. The yellow is the volume of March, and the green bars is the volume of April. So on February 16, volume is almost equal, and at the following day, Friday, most of the volume is on April. Then we have the weekend, and the Monday, next Monday, even having the price moving, volume is almost insignificant. We have 17,000 contracts against only 600 contracts. And today we are on a similar situation. Today is Thursday 16, with the volume almost equal, but still bigger the old contract. So maybe tomorrow Friday we have bigger volume on the red, on the May contract. Usually the days when we have mixed volume, the price action is not as smooth as usually. The patterns that we usually follow are not working fine. So usually most traders try to stay away from trading those days and start trading at the following week. So next Monday we can start with the new contract. Something else that we must also have into account is looking at the price difference between each contract. We can see that we have a big difference between one contract and another. I will switch again to the default mode. Refresh the historical data. So on the default mode, we can see that the reported volume for all contracts is the same, so we cannot compare the volume of different contracts. So from the rollover defined by the system to the past, the current and previous contract volume is the same. On March, it is also the same. From 15 to the past, the volume is the same for any contract that we choose. Same happens with the price. If we look at the current contract on May, what we are looking here is the active contract to March 15. This is the May contract. From here to the past, this is the April contract, but adjusted, adding the offset. Which is the difference between this price against this price. We can find that offset in the Tools Instrument Manager. Here is the place where, if we don't have that instrument, we can add this to our list. But if we edit the instrument on the miscellaneous tab at the bottom, we can see, and also we can change the rollover date and offset. For example, for March 15, we have an offset of 65 ticks. So between March 14 and March 15, we have 65 ticks. If we look at the February offset, between March and April, the rollover date is February 15, and we have 51 ticks, 0.51. That means that on February 15, between one instrument and the other, Ninja is adding 51 ticks. We can check if this is fine. 52.86 minus 53.37 is 0.51, 51 ticks. So Ninja is showing from February 15 to the past, is showing the March contract, and from February 15 to the present is showing the April contract, but adding an offset of 51 ticks. And now from March 15 we are doing the same. So in a few words, when we are looking at I will remove all the previous contracts. When we look at this historical chart, we are looking at an adjusted and several times adjusted chart where we are adding an offset. This is April plus an offset, and this is March plus another offset. So at this point we are adding two offsets and more to the past. So this low pivot in fact is the low made on March plus an offset between March and April and another offset between April and May. So it is possible that this low pivot is not the same on all the platforms, because the offset is calculated on each computer according to the date defined on our rollover table. Hope this video has been useful for you, and if you have any question or comment, please post below the same. Thank you everyone, bye bye.